Hello guys, how are you? Today I bring you another topic of great importance. Alright, let me ask you a quick question. If tomorrow someone gave you $100,000 and your goal was to turn it into 1 million, what would you do? Most people would answer something like this. I'm going to start trading. And that is exactly where the most common mistake in the financial world appears. Because most people believe that investing and trading are exactly the same thing. But they are not. They are completely different. And pay attention, because understanding this difference can save you years of frustration and thousands of dollars in losses. In fact, the problem is not only that people confuse them. The problem is that the internet is full of videos that make trading look like an infinite money machine. You see charts. You see screens filled with numbers. You see people showing huge profits. And then someone who is just getting started thinks, of course, that's what I should do. But here comes reality. Most people who try to make money through trading eventually discover something very different. They discover that predicting short-term movements is extremely difficult. Much more difficult than it looks from the outside. And that is exactly why I want you to forget everything you think you know about investing during this video. Because first we're going to understand what the mistake is. And then we'll see what the solution usually is.
And trust me,
once you understand this, you'll start looking at money in a completely different way. Did you know that many people enter the market thinking they're going to get rich quickly and end up doing exactly the opposite?
yes,
And it doesn't happen because they're foolish, or because they don't work hard, or because they don't want to learn. It happens because they start down the wrong path.
all right,
Let's define things in a simple way. Trading consists of buying and selling assets while trying to profit from short-term movements.
hours, days,
Weeks. Sometimes even minutes. The idea is simple.
buy low,
Sell higher. And repeat the process over and over again.
on paper it sounds fantastic.
But there is one small problem. Nobody knows with certainty what will happen tomorrow, much less what will happen in the next hour. That is why traders constantly compete against other traders, against investment funds, against banks, against algorithms, against companies that spend millions of dollars analyzing markets. And here comes an uncomfortable question. If professionals with decades of experience struggle to predict short-term movements, what chance does someone who is just getting started really have? That is the question almost nobody wants to answer. Because it doesn't sell courses. It doesn't generate clicks. It doesn't sound exciting. Now comes the interesting part. Because if trading is so difficult, then why do so many people talk about it? The answer is simple. Because fast stories attract attention. A person making a lot of money in a few days creates headlines, creates videos, creates views. But there's something curious. Slow stories rarely go viral. And that is exactly where long-term investing comes in. Long-term investing works differently. Very differently. Here the goal is not to predict what will happen tomorrow, or next week, or next month. The goal is to participate in economic growth over many years.
Think about it this way.
When you buy a small piece of a solid company, you are not just betting on what will happen tomorrow. You are betting that the company will continue producing goods, services, and profits for years. And this is where many people begin to change their perspective, because they stop asking, what will happen this week? And start asking, what will happen in 10 years? Those are completely different questions, and they usually produce completely different results. Let me tell you something interesting. If you watched our video about the history of Wall Street, you'll remember that financial markets have gone through wars, crises, recessions, financial panics, and periods of enormous uncertainty. And yet, over very long periods of time, major economies continued growing. Companies continued innovating. Businesses continued expanding. That doesn't mean everything always goes up.
No.
Markets also fall. Sometimes a lot. But historically, long-term horizons have told a very different story than short-term horizons. And here comes one of the biggest advantages of the long-term investor. They don't need to be right all the time. They don't need to predict every move. They don't need to live glued to a screen. They simply need time. And interestingly, time is one of the most powerful resources in the financial world. Much more powerful than most people imagine. Because while some people try to predict the market's next move, others allow the years to do much of the work. And that difference is enormous. Now, let's do a mental exercise. Imagine two people. The first one constantly buys and sells. They're checking charts, news, rumors, indicators, opinions, all the time. The second person invests regularly over many years, month after month, year after year, without trying to predict the market, without trying to find the perfect moment, simply maintaining discipline. Who do you think has the greater probability of success? The answer may surprise many people. Because the human brain loves action. It loves feeling busy. It loves believing it's constantly making decisions. But markets often reward exactly the opposite. Patience. Discipline. Consistency. Words that sound boring. But words that have historically proven to be extraordinarily powerful. And here comes an uncomfortable reality. Most people lose money not because the market is impossible. They lose money because they make emotional decisions. They buy when everyone is excited. They sell when everyone is afraid. And they repeat the cycle over and over again. And what is the solution? Well, it starts with understanding that investing should not feel like gambling. When someone enters the market expecting to double their money quickly, they are often getting dangerously close to a casino mentality. And pay attention. I am not saying that all traders are gamblers. There are extremely skilled professionals. But it is also true that many people arrive with no experience expecting immediate success. And that's where the problems begin. Because the market does not give away money. It never has. It never will. That is why long-term investing is so interesting. Because it completely changes the focus. Instead of asking how much money you'll make this week, you begin asking how much wealth you could build over decades. And when you start looking at things from that perspective, many decisions begin to look different. Much more rational. Much more sustainable. Much more realistic. Now then, there is another huge mistake we need to mention. Believing that long-term investing means getting rich slowly while doing nothing. That doesn't work either. Long-term investing still requires education, patience, emotional control, and above all, consistency. Because investing once usually does not change a financial life. Investing consistently over many years can. And this is where many people quit too soon. Because meaningful results usually take time. Sometimes a lot of time. But that is exactly why they are so difficult to replicate. Because very few people are willing to wait. We live in an age where everything feels instant. Social media is instant. Messages are instant. Videos are instant. But building wealth still operates under much older rules.
Time.
Patience. And gradual accumulation. It doesn't sound exciting, but it is often much more effective. Let me tell you something interesting. If you watched our video about the history of Wall Street, you'll remember that financial markets have gone through wars, crises, recessions, financial panics, and periods of enormous uncertainty. And yet, over very long periods of time, major economies continued growing. Companies continued innovating. Businesses continued expanding. That doesn't mean everything always goes up.
No.
Markets also fall. Sometimes a lot. But historically, long-term horizons have told a very different story than short-term horizons. And here comes one of the biggest advantages of the long-term investor. They don't need to be right all the time. They don't need to predict every move. They don't need to live glued to a screen. They simply need time. And interestingly, time is one of the most powerful resources in the financial world. Much more powerful than most people imagine. Because while some people try to predict the market's next move, others allow the years to do much of the work. And that difference is enormous. That is why when someone asks you what the secret to investing better is, the answer is probably less exciting than they expect. It is not about finding the magic stock. It is not about discovering the next secret move. It is not about predicting the market perfectly. It is about building solid habits, making reasonable decisions, and maintaining a strategy long enough. If you watched our videos about inflation and government bonds, you'll remember that we talked a lot about protecting the value of money.
Well,
long-term investing can become another tool toward that same goal. Not to get rich overnight, but to build wealth gradually over the years. And that difference is fundamental, because it completely changes expectations. And when expectations change, decisions change too. So, let's return to the original question. If tomorrow someone handed you $100,000 and your goal was to build wealth, what would you do? After everything we've discussed today, you probably have a different perspective. Maybe you understand that the real question is not how much you can make tomorrow. The real question is how much you can build over the next 10, 20, or 30 years. And that question usually produces much more interesting answers. Because sustainable wealth is rarely built through speed. It is usually built through discipline, through time, and through the ability to stay committed even when markets become noisy. That is why the next time you hear people talking about trading and investing, you will no longer think they're the same thing. You will understand that they pursue different goals, that they involve different risks, and that they require completely different mindsets. If you want to keep learning about money, economic history, and how markets really work, subscribe. And don't forget to watch our video about the history of Wall Street, because understanding how the modern market was born helps tremendously in understanding why it works the way it does today. And once you understand that history, many pieces begin to fall into place. Because in the end, behind every chart, behind every stock, and behind every investment, there is always the same question. Are you trying to predict the next move? Or are you trying to build something that lasts for decades?
And trust me,
The answer can completely change your financial future.